Hey everybody, welcome to another weekly roundup for our trader group. This is through the Friday the 13th, March 2015 roundup. What I've got on the screen here is a daily chart of the E-mini futures. Let's get it back on the screen here for you. You can see how we've been in a fairly tight pattern going all the way back to early 2012. And there have been just a couple of instances where we've broken out of this pattern. But we've quickly gotten ourselves back into it again. You can see this area right here that I'm highlighting in yellow. We were quickly out in October. We got in. But then starting in 2014 or 2015, we've been out several times. And we spent a lot of time out of it. And then we went back out again. So we're really... 2015 is proving to be a very difficult year, and you can see in this area right here, we're spending more time out than in this channel. So what does that mean? Well, I said going into 2015, the markets were going to be a lot more volatile, a little bit more choppy for us, and I believe it's going to stay that way. I believe that we're going to have a situation here where we could get a larger pullback. But first, I don't want to get too far ahead of myself. So let's zero in on the chart here and just show you a couple of things that that I'm looking at here. So let's just get the chart back up here. Let's zoom in. And I'm not going to go over a lot of things today, but a couple of important things that you guys need to be aware of. You can see these shaded zones on my chart. These are areas where the market has either provided support or resistance, depending on the direction of the price movement. And you can see that we hit our all-time high here of 2117.75. That's in red. And, well, let me just do this because I wanted to, let me just get a couple things set here so I can get all of this on the screen here. And I apologize, but my screen is going to go from white to the chart because eSignal doesn't play that well with this WebEx software. But now let's get it back on here. So let's talk about this again. You can see these red dashed lines represent the low and the high of 2015. This blue line right here represents the opening price of 2015. You can see over the past couple of days last week, we went below the opening price of 2015. So we're underwater for the E-minis year-to-date in 2015. You can also see the 50 EMA, which we kind of hung up on. We could not broach it. And a couple of times on Friday and Thursday, we actually moved above 2055, but we couldn't hold it through the end of the day. And you can see this trading range that we've been in throughout the entire year of 2015. It's about a 147 point difference from roughly the high of 2117 down to the low of 1970, about 147 points. But right now, out of all these 147 point movement, we're right around where we opened for the year. So, but it seems certainly a lot more volatile than that. Now, as we were approaching this peak here, I was telling our members, be ready for some weakness, and that's exactly what we got here. We had the right signals that we look for, and I love getting these signals, and that's what we did. So now, if I go into the 120-minute chart, let's get the chart back on the screen for you here. You can see right now where we're sitting here. In classic trend theory, we are making lower highs as we make lower lows. Very classic, okay? I'm not going to have it on the chart, but I just want to show you that channel that we're in. And we had we had a pretty weak day on Friday. It tried to come back just a little bit towards the close. But now the key question is, where are we going from here on Monday and Tuesday? Now, just as a reminder, this upcoming week is triple witching, which means we got quarterly options expiring, monthly options expiring, futures expiring. So we have a number of different option contracts that expire, which tend to give the market a bullish bias, provided there's no other noise in the marketplace. And to talk to that, we haven't triggered yet, but we're setting up for a potential, as we say in our group, a bud or a bullish divergence, which would tend to say that this 2032.50 number will hold and will come back up and challenge the 2055 again as we move through the week. Should this 2032 number fail, then we're going to come down and test this minor support zone here, sitting around 2025, 2020 area. And should that break, we're going much lower. We're going to come down and test the 200 EMA. So that's a little bit about where we're sitting here. Now, the other thing I wanted to talk to you about, let's get back to the daily here for the E-minis. You can see the E-minis right here on the daily. We're below the 50. We're below where we started in 2015. If we look at the Dow futures, you can see the same thing here. You can see we're below the 50 EMA. We're below where we opened for the year, and we're still in this down move. Now, if we look at the Russell, it looks a lot better. The Russell chart gives us, you would never know, looking at the Dow and the E-minis, the Russell would be like this. Now, this is the Russell futures. In the Russell futures chart, you can see we bounce nicely off the 50 EMA. In fact, we're looking at approaching all-time highs in the Russell. And this blue right here, 1203.90, was where we opened for the year. We closed the Russell futures 1227.70. So we're about 24 points higher than where we opened. Now remember 2014, the Russell, small cap and mid cap, underperformed the market. This year, I think the small cap and mid cap will outperform the market. Why? It all has to do with currency arbitrage. It has to do with the strength of the dollar. It's a race to the bottom with every country getting their interest rates as low as possible. The dollar gets stronger. And you may say, well, what does that have to do with small and mid cap? Well, small and mid cap are less affected by a strong U.S. dollar than large cap because most of their earnings occur here in the U.S. So a strong dollar really does not affect small and mid cap. So we like small and mid cap. In fact, I told our members in January they're probably going to outperform. And there are other things that we're playing across the pond in Europe that I think are going to outperform as well, but I'm not going to go through them here. Our members can see what we're talking about. Now, the other thing is I also said, let's look at the NASDAQ 100 futures. If we look at the NASDAQ 100 futures, let's get it up here. You can see the NASDAQ 100 futures. We're also below the 50 EMA, but we're above where we opened for the year. So the NASDAQ, while not performing as strong as the Russell, is still outperforming the Dow and is outperforming the S&P 500 for the year to date. So again, I'm still sticking to, we want to be long small and mid cap and loosen our weighting on large cap stocks. Now, if we look at the volatility, here is a really interesting chart here I will show you. This volatility, you can see this area right here, this shaded area. That is kind of where we've spent the bulk of 2015 volatility-wise. And as you can see, if we extend that to the left, the only thing you see to the left in this range or this height right here are just a couple of spikes, but otherwise volatility was down in this range for 2014. So we've shifted up higher volatility for 2015. We did come down here, granted, in the end of February, because February is a very strong month, but you can see how we've quickly come back into the lower part of this shaded zone here. So volatility is back in play. So we've got a really interesting vol market that we're looking at. Now, what's going to affect it this week is we got the FOMC meeting on Tuesday and Wednesday, and then Wednesday afternoon at 2 o'clock, we get the interest rate decision. Now, they're not going to raise interest rates at this meeting, but what everybody's going to be watching for is if they take the word patience out of their statement. If they do that, it's going to be more of a hawkish tone than a soft tone. And we can expect to see bonds sell off a little bit, dollar get a little bit stronger, commodities stay a little bit weak, gold stay a little bit weak, and more than likely we'll get a little bit more of a sell-off in the equity market. Why? Because the Feds are talking about raising the rates sooner. If they say that they're going to leave the rates where they are for a while, there's a big debate on that, and you can flip a coin and pick one side or the other. We do not want to do that. You get caught into that, your brain will be just flipping back and forth, and I promise you it's just a guess at best what's going to happen. If you follow the price action, you'll be okay. It's a lot better to do that. Everybody wants to be right, of course, but you know, it's not about being right. It's about making money, and that's what you want to do. You're not going to pick the tops, and you're not going to pick the bottoms. So that's kind of where we want to be. Now, if we look at TLT, which follows the bond market, let me just get TLT on here. You can see TLT is doing pretty much what I had indicated. We got short TLT and the bond market up in this area right here, and then we had a nice pullback. We had a little bit of a counter trend move, and then we came down, made new lows. This is the opening price of TLT for 2015, and I said expect a bounce. Sure enough, we got a bounce. This is the 50 EMA, and we just kind of bouncing right off of that right now. So all I'm seeing right now, all I'm really seeing in this, quite frankly, is just a channel that is kind of moving in this direction. That's all I'm seeing. So when we get up here, we can expect more shorts to enter in. When we get down there, we can get a counter trend rally like that one, like that one. Now, if the Feds come out and they say they're not going to say it overtly, but maybe covertly in the words they use, that they're going to have patience and they're going to wait and see, and depends on the strong dollar and the problems of the rest of the world, then we're going to see the bonds rally. We'll see TLT rally up a little bit, okay, which will be fine with us. We'll wait to take another short down here. So we're more of selling on the rally rather than buying on the dips at this point in time. Now, if you're a day trader, certainly by all means, the bond market and TLT have given you a very good vehicle to trade the peaks and sell the rallies and buy the dips short term, but longer term, no. Now let's look at the euro here. The euro is a cause of a lot of consternation. You can see the euro just keeps moving down and down, and it settles. It gets into a trading consolidation, then it comes down. It actually went below my target, and now it's sitting at a key point, 1.047. If that breaks, we're going to come down and test parity, which I believe now is going to happen. It's just a matter of when and the timing, but you can expect during this move down, you can expect some sharp counter trend rallies as it comes down. These sharp counter trend rallies is because it's a very crowded trade. There are a lot of shorts in the market, and the only way shorts can recover in a counter trend is to buy to close their position, which creates an increased pressure of buying, which gives us these sharp counter trend rallies. But then once those shorts are all bought out, there's no new buyers in. It's going to roll right back over again. So trading this near term, buy or selling the rallies, is definitely where I want to be in the euro market. If we look at the British pound's done exactly also what I've told our members it would do. On the British pound, let's get it back on the screen for you guys. You can see here where we actually played this rally to the upside, and then as it's moving up right here, I said be wary. We've got this old famous 3-4-5 Elliott wave pattern. I put the target right here. It's been here for about 3 weeks, and this is exactly where we're going. A sell signal was generated right there. You could have shorted this thing. I'm playing a buy on a dip kind of mentality, but on a daily chart. But selling this would have been a good move over a near-term basis. And we're going to come right back down and hit this area here. In fact, we may go even lower as the euro continues to fail. Why? The British pound is subject to a lot of exports to the rest of the European ECB, the 18 countries that make it up. So it can slow down their economy, which would then put a pause on any interest rate rise out of the British pound. It looks like the U.S. dollar and the FOMC and the U.S. government is about the only place where we can see any potential interest rate rise near term, meaning the next 6 to 9 months. If we look at energy, this would be the last one I wanted to show because a lot of people are looking at oil. We were in this consolidation pattern, but I have said all along that we're probably going to see 40 before we see 60, and this is what's happening. We stayed in this nice long consolidated pattern. We had a pretty rough day on Friday for the oil bulls. It just sold off. Now we're going to come down. We're probably going to test this 43.58 area. Should that break, then we're going to continue lower. This bar here is put on. It's a combination of Fibonacci and Gann, and it's still giving me the same prognostication of around 38, 39 as a final resting point, support point for oil, but I called 50, and then I've reduced my target down to 40. I know some people are saying 25 or 30. I don't think we'll get there, but we're certainly going to go lower. All right, everybody, I hope you've enjoyed this fast, accelerated weekly update. For those of you that are non-members, I highly encourage you to come on in. We've got a great start to 2015. I think it's going to get even better, especially in the currency market and the bond market. It's going to be choppy, so there's ways we can play volatility. Also, I've just launched, just for our members right now, what we call our Secret Trader Portfolio, where people can follow along with my trades via trigger alerts on SMS. And email, but you've got to be a member to be able to sign up for that service. Then shortly I'm going to be offering that for non-members as well, but not at a discount that I offer our members. And it'll be for a portfolio size of 25,000, so that'll allow a lot of people to be able to play. All right, everybody, have a great weekend. It's triple option expiry this coming week. Let's see how we kick things off and understand on Wednesday we got the FOMC at 2, and then we got one of our quarterly press conferences with Janet Yellen at 2:30 on Wednesday. That promises to be a very exciting and potentially volatile time. Have a great weekend, everybody, and I'll see you guys later.